Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Treasury Secretary Scott Bessent and Fed Chair Powell summoned Wall Street leaders to an urgent meeting over potential cyber risks from Anthropic's new AI model. Plus, Anthropic has agreed to rent data centers from CoreWeave to power such AI services. We speak with the CoreWeave CEO Michael Intrator this hour. And after an historic trip around the moon, the crew of Artemis II prepare to splash down today. But first, we check in on these markets. An extraordinary rally has occurred over the last few days. I hope on the conflict resolution is nearing with the US and the Middle East, of course. With Iran, that discussion happens over the course of the weekend. We're up almost 5% on the Nasdaq 100. We're up for 2 straight weeks, and indeed it's the best week we've seen since November of last year. But there is a lot of angst under the surface of what's happening with the course of AI developments. Let's dig into a key story everyone is reading today. Bloomberg has learned that Treasury Secretary Scott Bessent and Fed Chair Jerome Powell summoned Wall Street leaders, these leaders, to an urgent meeting earlier this week. Sources say the focus was on concerns that Anthropic's new AI model will usher in an era of greater cyber risk. Look, that echoes the AI lab's own worries. It gave tech financial firms limited access to the Mythos model to help prepare. Let's get all of the discussion with Bloomberg's banking and finance reporter, Catherine Doherty. And Catherine, what's notable is the urgency with which this happened, correct?
Yes. So earlier this week, many of these CEOs were already in D.C. for the Financial Services Forum. But the level to which this meeting got arranged that wasn't previously on the agenda, and the hush-hush nature, it really was not meant to be something that was broadcast, even though you have Brian Moynihan, you have the CEOs from Citi, Goldman, all of these big bank leaders that, again, would have already been participating in some form of meetings already around D.C., but this one was meant to be something that was behind the scenes and a precautionary measure, something that is starting the discussion about the concerns that are being raised around these AI tech issues that are coming into view right now. I think it's very early days, and the next step after this initial meeting, and again, because the discussions are just starting, is how the banks deal with and prevent any further scrutiny that might come up from other advanced tech that they might either be implementing or going to slowly be implementing in the future.
And look, it was interesting that Jamie Dimon wasn't there, seemingly a calendar conflict. But he's already part of the Glass Wing project, as it's known. Already, Mythos and the power of this AI model of Anthropic was well known, and Anthropic itself had put it into the hands of 40 such partners, including JP Morgan, to ensure that they stress test, to ensure that they're on board. So are these CEOs well aware of the power of these AI models? Because, look, OpenAI has been doing similar things to try and educate about the cyber concerns.
That's right. There are guardrails, and that's really why these steps are being taken. This is not just being widely disseminated to these companies or to the public, for that matter. So these CEOs, I think, for the ones that were a part of this meeting, you have both the discussions of raising awareness, and then if you are already aware, what are you doing about it? How are you taking steps to protect your data, your internal data? That includes all of the data that you have on the U.S. consumers that you're banking. So these are the kind of things that are being really talked about, both from the precautionary level and then strategy-wise, how they can put guardrails in place. As you mentioned, some of the companies that are already part of this project Glasswing, they're testing these things out. And that means that they're both looking at how their systems can be improved. Really, these AI models are not meant to be things that are,
there's upside as well as downside.
There is upside, exactly. It's meant to be something that helps, right? Improves and identifies some of the vulnerabilities, but then it's meant to protect. And so the questions have emerged, though, of if you identify and then the tech gets around it and starts to take advantage of those vulnerabilities that they identify, those are the main concerns that are being brought up.
For these systemically important financial companies. Anyways, Catherine Doherty, with all the news that's happening when it comes to the relationship of the banks and Anthropic. And look, let's talk about the compute needed for Anthropic. Maybe that's in some way why we're seeing a limited rollout of Mythos. Shares of CoreWeave, though, as you can see, trading up 13%. after landing a multi-year deal with Anthropic, renting out data center capacity to power its Claude AI models as demand for the infrastructure surges. This comes just a day after CoreWeave, of course, announced that whopping $21 billion deal with Meta. We want to get an analyst take. Brent Thill is with us, Jefferies. You've got a buy rating, I believe, $120 price target. Look, how much does the sentiment around CoreWeave with its Meta deal, now with its Anthropic deal, end up pushing out the price target, at least, for this company?
Yeah, I mean, we have a $120 price target in a buy, and the stock had obviously started pretty weak on some of the AI concerns. But I think what we've seen is they continue to sign the A-list talent in AI. Meta, Anthropic, they have Microsoft, Google. They are the luxury AI builder to the stars.
Luxury. Luxury being that they offer NVIDIA compute in particular, Brent, or how are we seeing that being diversified at this moment?
Yeah, they're the luxury builder, and they basically help assemble what is required for these systems to work. Doesn't matter the ingredients, they'll take whatever you want, whether you want a steak dinner, salmon dinner, vegan, whatever, they will assemble according to your needs. And when you have the best data center builders in the world turning to CoreWeave, it's a pretty strong signal. And what I'd say is that none of these companies can build the infrastructure on their own. Microsoft said in their last earnings call, they don't have enough physical buildings to put the compute in. And everyone is saying this from the AI conference this week in San Francisco. There's not enough compute. And that's why semis are going straight up and software is going straight down, because CapEx continues to explode. Is the ROI pushed out? Perhaps, but CoreWeave's going to be caught up into this in the next few years.
And you say it's been volatile and it hasn't been straight up, and the volatility has come about how it affords. And the moment we saw some volatile trading just yesterday, because when they announced the Meta deal, they also talked about selling more convertible debt and the idea that they have to finance the revenue growth. How are you getting comfortable with that with CoreWeave?
Well, they, in our math, they have something like $90 billion of backlog. And these customers are, minimum 5-year deals. They commit a certain amount up front. They just raise capital at a lower cost of capital than they've raised because they're getting these from some of the best companies in the world. They're not signing up, Sally or Joe's data center infrastructure down the road. They're signing up Meta, Google, Microsoft, the top companies in the world that have ginormous cash flow and have no funding concerns. And again, I think the CEO has said this repeatedly, Michael, which is, these are contracted, committed contracts that are legally stamped, that they can't turn back on.
Yeah.
And so, look, the long-term question of what does the margin look like, and can they produce an incredible software-like business like what Amazon and Azure did at Microsoft? That's the real question. I think they're leaning that way. And if they do this, the stock could even go a lot higher. And right now, we don't have proof that that is completely off the ground and is flying with no turbulence. I think that's the direction. And if they pull this off, which is today, they build the infrastructure, and then tomorrow they're building and capturing the software, these workloads will not move and they will stay with them for a long time. So that's the real question. So I'd say tactically in a really good spot. I think long term, we all have questions about what the model, what the business looks like.
Yeah.
But when you have CapEx going up 70% for the industry, and we're going to spend $700 billion, and this company has, a $50 to $60 billion market cap, and they have $90 billion contracted backlog plus, I think it pretty much tells you a signal, the stock's going higher.
Talk to us about how Anthropic started the week, and it's felt like a very long week, but if I cast our minds back, they were part of the Google and Broadcom announcement, and the idea that they're going to be using ever more TPUs, perhaps coming from Google, which are, of course, formed by Broadcom. How much of a need is there for Anthropic to get the compute right now? Do you have any idea of which of the customers that are most in the need and know right now? Because there's some reporting out there that maybe Mythos is being rolled out slowly because these new models have to be rolled out slowly because there isn't the compute to satisfy all our needs.
Well, Anthropic, we've never seen a company get to 30 billion this fast, right? And so when you think about Anthropic, looks like a rocket taking off. We've never seen a company, they beat Google, they beat Amazon, they beat everyone, to this $30 billion target. So no one's seen this. And what we keep hearing from everyone, and including my own use of Anthropic and in OpenAI, you can see it. They keep throttling users. They keep trying to get you to pay more. They've told you you've reached limitations. We've heard repeatedly that, again, there was a big article that you guys wrote on Amy Hood stalling data center build out at Microsoft, and how, she hasn't publicly said this, but how they regret it. And they wish they had built more. And they just said last quarter, they don't have enough physical buildings. So like right now, the demand is so great, and it's coming from all angles. You look at Meta, Microsoft, OpenAI, Anthropic, even Oracle, we've heard, they aren't as price aggressive, and they're not price aggressive because they don't have to be, because there's really no demand, and so they can charge whatever they want. So you're seeing signals everywhere that, and this, again, I think this is why my group I cover is software is going straight down, and why hardware and semis, memory, look at SanDisk, look at Bloom Energy, look at what's going on all the picks and shovels of AI. We are nowhere near built out. And if you believe the CEO of SoftBank that we're going to have half a $1 trillion data centers for AI, but we might have $1 trillion robotics data centers in the future. I mean, this again, I don't want to be like, these are big numbers, and we're really early in the build out. I think the CEO and CoreWeave has been saying this. I mean, I don't think Microsoft has said this repeatedly. They sit down and their hair is on fire, and literally they cannot keep up with what they're doing every single day, because the customers are demanding this. And you see it in the revenue numbers from all the AI stories that we're covering.
Brent, thank you. You always spell it out so clearly for us. Have a good weekend. Brent Thill of Jefferies there. And stay with Bloomberg Tech. We've got CoreWeave coming on. Michael Intrator joins in less than 30 minutes' time in New York. Coming up, plenty more to dig in on the AI trade. TSMC sales surging 35%. That's even as Middle East tensions persist. However, Asian stocks today extend their slide, and that's a software issue. Brent was just talking about it. This is Bloomberg Tech. AI remains a tale of two markets. Let's talk about that, with TSMC, for example, hardware, defying Middle East volatility with a 35% revenue increase. As AI infrastructure demand just surges, but software stocks, just look what happened across Asia trading, for example. They're continuing to struggle, and they're sinking here in the US too. Bloomberg's Yukyung Lee can talk us through it all. Let's go to the glass half full TSMC numbers. Phenomenal.
Absolutely. So TSMC is the most valuable company in Asia, and it's the world's largest founder chip maker. So its first quarter results were important, and investors were looking for clues whether the impact from the prolonged war in Iran before the ceasefire had any impact on the demand for the AI data center or gadgets like the iPhone. And it's clear that looking at this first quarter result, which were higher than projection, that is going to ease the concerns about this war having an impact on the AI data centers or demand for AI data center or the gadgets like the iPhone. So the war in Middle East has been pressuring the energy prices and the shipping routes, and there were concerns. And these earnings are going to give clues to investors whether there will be impact on the tech giants' spending plan. The shares also rose. The shares rose 2% in Taiwan overnight, and is also rising in its ADR is also rising in the U.S. It was close to the February peak all-time high in Taiwan. So it's clear that there's a rally in the hardware tech space.
I mean, a very round number right now, 2,000, up 45 points. But then on the downside, same thing is happening here in the US. People are selling off software. What sparked it in Asia?
Absolutely. That software sell-off, we saw that spreading to Asia overnight, especially the India market, which has heavy exposure to software stocks, saw big sell-off in the software names. And this is the resumption of the AI disruption fears that we saw before the war in Iran. And definitely there was the buy Asia tech names, hardware tech name before the war started. And during the war, the high-flying hardware tech stocks were the most beaten down during the war. And we're seeing kind of a reversal story here. We're seeing the resumption of the sell-off in the AI software name, not only in the US, but also in Asia. And this recovery in the beaten down hardware tech memory chip or other hardware tech names in Asia.
We want to thank you, Yukyung Lee, all over what's happening with Asian trade. Let's bring it back to the United States and more broadly. Sylvia Jablonski's with us, CEO at Defiance ETFs, saying that markets are being driven by two powerful forces right now as well. On one side, it's AI growth. On the other side, it's geopolitical tension. And look, as we head towards a weekend where there will be discussions and Vice President Vance flying out at the moment to hopefully secure a more secure end or resolution to the conflict, how does that affect what you're seeing in terms of purchasing of the ETFs?
Yeah, so it's really interesting. I think that what we've seen over the last couple of months or so is that a lot of the thematic ETFs that are in the AI space, whether it's AI power, whether it's AI infrastructure, whether it's like the straight chip names, they've taken a hit very much like they have in other crises, whether it's, Ukraine tension, whether it's COVID, things like this. And, lo and behold, we hear that a resolution could be on the way and all of these names start to rally again into the market. So I think I'll just be looking at what happens with the geopolitical conflict, because I think that long term, this is the investable story. It's all about AI, AI infrastructure, AI energy, AI space and connectivity. But I think that the geopolitics will be a huge overhang. If we don't see a resolution there, expect a lot of market volatility, expect a pullback. If we do hear that the ceasefire is more than a ceasefire and we're sort of moving forward, then I think the market's back on track for a potentially positive year.
But with the angst, of course, with war, it's about people and humanity.
Yes.
But there's also supply chain, people's access to raw materials that they really need in the rest of the world. And that's a chip story in many ways.
Yeah, I mean, that's a huge story now, but again, it'll depend on when this ends, right? So I think if there's a resolution to the conflict soon, a lot of what we're seeing on the supply side will be resolved in a month or two, right? It won't be overnight, but I think we'll get back to kind of reverting to the mean there. But I think
we'll get back to all the problems with supply chain that already exist when it comes to AI.
That already existed, but it won't kind of pile on and get worse, right? But I think if this goes on for another month or two, then you really start worrying about things like inflation, the price of oil, gas, and energy, and how that factors into the consumer's wallet and then the stock market.
I mean, energy prices have been factoring into the AI build-out. We're, of course, reporting that OpenAI is curtailing its Stargate UK ambitions because of energy prices there. How much are you seeing the ETFs showing that either that we're in a bubble or indeed that there's still this more worry that the stranglehold, the chokehold is really a lack of energy and a lack of infrastructure?
Yeah, I mean, what I would say is I would almost take the contrarian view on that, because if anything, we've seen inflows back into the AI energy trade. Like the AI energy and infrastructure trade, for example, has been probably one of our most popular in the last couple of weeks, because I think investors are looking at it and saying, like, we already have this backlog, as you're saying. Right now, AI is using 4.5% of the world's energy. In 2 to 3 years, it's supposed to be 10%. Throw on top of that the geopolitical issues and the supply issue there. What happens over time? It becomes more expensive. These companies could benefit from this over time. So I do think that overall it does benefit AI infrastructure in the future.
Your ETFs very much hardware exposed rather than software exposed, and at the moment software having a terrible day of it as well. Even names like Palantir, which are a defense play, and even President Trump himself talking about Palantir and the application in war. What's interesting, we spoke with the CTO a couple of weeks ago talking about how this is an AI war. Just take a listen for a moment.
Obviously, current operations are ongoing, but I think people will reflect back and say this is the first large-scale combat operation that was really driven, enhanced, made substantially more productive with technology, with AI.
And really, we did see the CTO articulating that we've never seen a conflict like this as AI exposed.
Yes.
How much is that being shown in some of your ETFs, JEDI, for example, those that are focused on war and drones?
Yeah, so JEDI has certainly, had its day in the sun. I think a lot of investors have flocked to it for that reason. It holds stocks like Palantir, and it also holds the drone companies like Kratos, for example, AeroVironment. And what happens here is that war has changed, right? It's perhaps not as much about the $200 million missile, but the 2,000 drones that you can send over for, hundreds and thousands of dollars, right? And it's more effective. They're unmanned drones and things like this. It's more about information and the ability and priority of decision making versus just tanks on the ground, right? And I think AI has changed completely the way that the world will approach war. And so if you think about that, we've had trillions of dollars of spending in aerospace and defense since the Cold War. It's the highest amount of spending that we've seen, and that's projected to just continue to grow grow at a 20 to 30% CAGR after Iran and the conflict, who knows even more, right? So I do think that a lot of the drones, the satellites, the space names, the Palantirs, longer term will be on the eyes of investors for that reason.
Not to mention with a SpaceX IPO coming up and Artemis ongoing. Sylvia Jablonski, it's been great having you with us.
Thank you.
Thank you, of Defiance ETFs. Coming up, we'll discuss the major AI models that come out thick and fast this week. What do they compete against? And how is that competition between the frontier labs? More on that next as Bloomberg Tech. It has been a busy week for AI model releases, with new announcements from China's Alibaba, as well as Anthropic, Meta. Let's break this all down with Bloomberg's AI reporter, Shireen Ghaffari. It's been an extraordinary week, and just the fear factor alone around Anthropic and Mythos, how are you discerning whether it's real worries about its power or real lack of compute that means it's doing a slow rollout here?
So it's a fair question. Until we have this model rolled out more widely, it's going to be difficult to say. Right now, there are, under 50 organizations, partner organizations, that can actually get their hands on this model. That being said, from the few people who have publicly experimented with it and talked about it, they are taking it seriously. And as Bloomberg reported this morning, the government is as well, hosting a meeting among some government leaders to talk about the potential vulnerabilities to the financial sector that technologies like this could raise if released.
Shireen, what has all this meant for OpenAI? Because it's been an extraordinary week for them as well in terms of public relations, but also what's been happening in terms of them saying to their own investors, according to your reporting, that, look, we're ahead of the game because we've got more compute, but yet they're not going ahead with certain compute projects in the UK, for example.
Yes, again, everyone is parsing different signals here and trying to understand which way things are headed, or rather why certain decisions are made. But what we do know is that there is still this compute crunch, and that all the major AI labs say they need much more compute in order to be able to serve their customers, and that tracks with what we're seeing in terms of restrictions on free usage with some of the major vendors, and they're charging more, right, for the most premium products. So with OpenAI, what we know is that they still very much have these ambitious plans for Stargate to roll out lots and lots of gigawatts of energy that people have never seen before in terms of the size numbers for powering AI. At the same time, we are seeing a pullback on that UK site, a pause, citing energy concerns, citing regulatory concerns. So price does matter here. They can't pay an unlimited amount for it.
Shireen Ghaffari, you're across all of these things. It's so busy. We didn't even mention what's been the Muse Spark announcement from Meta and what's happened with video in Alibaba and China. We so appreciate you joining today. Thank you. Coming up, we're going to talk about that compute crunch. Speaking to Michael Intrator, CoreWeave CEO. This is Bloomberg Tech. Welcome back to Bloomberg Tech. Let's check in on these markets, because we're saying it all show it's a tale of two halves. And Nasdaq 100 is showing with that hardware outperformance in particular at the moment. We're up 0.4%. In fact, we're up more than 4% on the week. Now, even as we see consumer prices jump, that core level of inflation actually relatively tame, so we got some support for risk assets. We've got planned peace talks throughout the weekend. That is the macro perspective. But then we're also thinking about the software sell-off. We're up by 2.6% on the ETF that tracks software names. Once again, tumult really ensuing from what the likes of Anthropic's latest models, other developments really mean for this area. Look at Palo Alto Networks. Here's a company that's actually helping with the Mythos trial. When you think about Glass project, in particular Glass Wing project, where they're testing with some 40 partners to be able to get ahead of any cyber risks, Palo Alto Networks is one of those. But it's still off by 7%, worst day in 2 years, as we worry about how software names are reconfigured in the age of AI. CoreWeave, though, benefits on the hardware side. We're up 12% because there is an absolute need for compute and infrastructure. And today they announced that they're doing that for Anthropic. Let's get to the CEO of CoreWeave now. Michael Intrator joins us. You've just had $21 billion deal announced with Meta yesterday. You have Anthropic today, Michael. What does this mean for your investors in terms of the clarity of revenue growth going forward?
Yeah, first of all, good afternoon. Thank you for having me. But it has been a unique couple of weeks for us here, because not only have we really made tremendous progress with the likes of Meta and Anthropic, but we've also had tremendous, overwhelming success in the capital markets as we continue to build the funding mechanisms to be able to ensure that we are able to execute on our roadmap for growth.
Let's talk about those funding mechanisms, because you're looking at unique ways to be able to get access to credit lines by using basically the power of your customer, the fact that Meta is the one that's coming to you for the compute and the strength there. You're also tapping, though, well, convertible notes was what was issued yesterday, as well as bonds. We're seeking billions of that. How much more debt are you going to have to take on to fuel the growth?
So, we've been very creative about how we kind of look at the capital markets, making sure that we can execute on our plan in the most cost-effective way. And so, we issued $8.5 billion worth of bonds at A- paper because of the quality of our counterparties. And, that was a tremendous reduction in our weighted average cost of capital. And then we came back yesterday, we did the largest dual offering ever. And that was both the convertible note that we issued, as well as a tranche of high yield, really positioning us well for the capital requirements. And it's just the oversubscription to these tools that we're bringing into market, to the paper that we're bringing to market, really provides tremendous transparency to us, to our investors, to our clients, about how much access we are going to be given to capital as we continue to execute on this strategy. And people are really confident the cost of capital keeps coming down in our ability to kind of drive the compute that is so dear to all of these model creators and product people who are producing product for artificial intelligence. It's just been an extraordinary week, both on the capital raise side as well as the client contract side.
As the cost of capital comes down, you get tapped more. How much more money do you need to get from the debt markets, Michael?
Yeah, so look, our strategy continues to be success driven, right? And so we go out and we execute a contract like the one we just did with Meta. And now with that contract in hand, we will go into the capital markets and we will raise debt that will be at a very low cost of capital to be able to build the infrastructure to deliver on that contract. Each of our contracts are profitable and drive wonderful return. And at the parent co, we're just looking to continue to scale into this, unique opportunity to kind of build, an enormous company that is instrumental in delivering infrastructure to the world.
How much does Anthropic need?
So we're not at liberty to speak to the size of that contract. It is a multi-billion-dollar contract, but really much more importantly than that, from our perspective, this is the first contract that we've executed with them. It's the first time that they've used somebody out of one of their core investors, and they came to us because of the quality of the infrastructure and the software solutions that we provide. And so, we just think it's an incredible vote of confidence from one of the most important labs in the world. And we think that it's going to be a launch pad for additional business between us and them, just as every other client that we've brought on. Really, all the major clients, they come on, they do a contract with us, and it's a land and expand strategy for both parties. We really build from that into a very broad-based relationship where we become an integral part of their infrastructure strategy.
Let's talk about Mythos. Does the slow unveil of the model to unique partners, does that signal an issue with compute? So look, the strategy that Anthropic is using to, as they kind of bring their products to market is really, it's their strategy. Our job in this ecosystem is to provide as much infrastructure at the highest quality that we can, right? And they came to us, they engaged us because they have demand for compute because of the wonderful products that they are bringing to market, and that's
being echoed across the different labs, universally. And our role in this is really to go ahead and to deliver the infrastructure that these companies are going to need and currently need to be able to successfully deliver their product to market. That's what our role is. We do.
Michael, I'm fascinated by the global perspective you have here, because the geopolitical environment that we live in at the moment means that energy prices are driving up, particularly over in Europe and the UK. OpenAI, we have reporting that they're pulling back on their Stargate project in the UK because energy is getting too expensive. And yet they're going out to their investors and saying, look, we're ahead of the game, we're ahead of Anthropic because of our compute that we have. What are you seeing in terms of people trying to rearrange where their compute is accessed from?
Yeah, look, the way I kind of view it, and my background really is within the commodity space, is that people are going to be very thoughtful about managing the cost of delivering infrastructure. And some of that is going to come from the energy side. It's going to be, hey, where can we get electrons that are effectively priced so that we can continue to drive our company. But it's also going to come from places like CoreWeave, where our software and the yield on the compute that we build is just higher than other alternatives because of the quality of the software environment that we build. And so you're seeing both sides of that coin really being driven, and you're seeing the success of our infrastructure and the adoption of our infrastructure because of the part that we can, impact. And so we look at the different energy markets. We place our infrastructure in lots of different places in order to mitigate localized risks, such as what's happening in Europe at the moment. But we really do think that the part that we can directly control is the quality of the infrastructure we deliver.
Would you pull back from the UK, Michael?
No, we have no intention of pulling back from the UK. We are well positioned there. We have a great relationship with the energy companies, with the data centers, and with the broader economy over there. And we absolutely will continue to build and expand our footprint in those jurisdictions.
Michael Intrator, I always wish we had more time with you. Thank you. It's been a busy week. You need some rest. We appreciate it. CoreWeave CEO. Coming up, it's been a busy week for 4 NASA astronauts. They flew around the moon. Returning home may be the most dangerous part. We'll discuss the expectations for Artemis II splashdown. That's next. This is Bloomberg Tech. After its historic trip around the moon, the crew of Artemis II is preparing to splash down in the Pacific Ocean this evening. Now, the 3 Americans, 1 Canadian, have broken record for distance traveled by humans in space, and were the first to witness parts of the lunar surface as they traveled closer to the moon than people have been in 50 years. Now, they're preparing for a pretty fiery plunge back into Earth's atmosphere in a major test of the Orion capsule's heat shield. Let's discuss that and what to expect with Bloomberg space reporter Sana Prashankar. And Sana, why is this such a test for Orion and the capsule?
Yeah, so during the first Artemis I mission, we saw that there were some issues with Orion's heat shield upon reentry. They had noticed some chunks of it had basically, fallen off when the Orion capsule splashed down. And so that was kind of a test of what is to come. And, they're trying out a different type of reentry this time, in which the Orion capsule will be exposed to those fiery temperatures for less amount of time. So, NASA says they feel very confident in the performance of the heat shield this time around. But, time will tell.
Just with Lockheed Martin built Orion crew capsule in particular, how has the company been navigating through this as well? And how have all entities worked together to ensure that this is as safe as possible splashdown?
Yeah, so Lockheed Martin has said that they have done a very comprehensive investigation following Artemis I of their heat shield and, what exactly went wrong, and have done more testing with the heat shield of, the current capsule to ensure that they wouldn't face the same issues again with this different type of reentry. So they definitely feel confident, and they have also engineered a new type of heat shield for the following Artemis mission, starting with Artemis III. So, they've said that they have really investigated the issues, worked through them, fixed them, and that will be implemented on the subsequent missions following this one.
Sana, it's been a busy week. Thanks for joining us. Sana Vashankar, there, our space reporter. Let's get even more with Laurie Leshin. She's professor of space future at Arizona State University, former head of NASA's Jet Propulsion Laboratory, first woman ever to do that. And just the scale of the anxiety as we wait for them for this splashdown at 5 p.m. Pacific time, 8 p.m. here in New York.
Yeah, I mean, it's definitely one of those pins and needles moments. We tend to, it's a little bit like waiting in line for a roller coaster. You're both nervous and excited. We're so thrilled to have the astronauts coming back down. But it is going to be a pins and needles moment for sure until they are safely back on the ship after they land in the ocean.
Talk about some of the numbers here. 10 metric ton Orion capsule. About twice the mass of the Apollo capsule, as you put it, Laurie. And what speeds are they hitting? And how hard is this to scientifically ensure that the heat protection's there?
Yeah, so it is. It's a 10 metric ton capsule, about twice the mass of Apollo when it, re-entered the atmosphere. So it's bigger, which is great for the astronauts. We've seen the cramped quarters. Can you imagine how small that Apollo capsule was? And yes, they hit the top of the atmosphere going 25,000 miles an hour. And over the course of 13 minutes, slow down to about 20 miles an hour. That should be their hit velocity, under parachutes, going nice and slow, coming down into the Pacific. And another number I love is the heat shield gets to be about the temperature of the surface of the sun, about 5,000 degrees Fahrenheit. That's really hot. And so this is one of the biggest challenges of spaceflight is our atmosphere is great to help us slow down, but it heats the heck out of everything. So we've got to make sure those heat shields work. And I think the work between Lockheed Martin and NASA and probably subject matter experts, even beyond those two organizations, have really contributed to the confidence that we have going in to today's reentry. But we'll still all be on pins and needles.
I mean, and the confidence that's been built over the last 9 days or so, this mission, and we don't want to touch on all the wood here at the moment, but has been remarkably successful.
It has, and look, we will celebrate like crazy once the astronauts are back on Earth, and then we can really breathe and take that moment to celebrate what an extraordinary accomplishment here in the year of the 250th birthday of our country, to once again inspire the nation and really the world with great science. Their flyby of the moon was, as a scientist, it made my heart go pitter patter. And also all of the data and information that we've gained about Orion and how it works and whether there are things we'll need to tweak before future missions. A lot of that data is resident on the capsule itself and in the brains of the astronauts. All of that will get downloaded once they're back on Earth.
And then push us forward to Artemis II then.
Right. So, and it's going to go fast now. This is what I love. I was involved in this program back at the very beginning, back in 2011, when the very first Orion capsule came off was being built and the SLS was born essentially. And now it's taken us a long time to be flying humans back into deep space with these two fabulous, with the rocket and the spacecraft. But now it's going to go faster. So Artemis III, we hope to launch in next year. So I expect you're going to hear very soon an announcement of crew, more specifics about the mission, which we've changed the mission profile from what was expected previously in order to, in part, to accelerate this and hopefully accelerate getting boots on the moon, which we hope will happen in 2028 on Artemis IV.
You're back in academia. What does these moments, I just think about my kids coming home from school every day at the moment with various art projects and things they've been doing around Artemis II. What has it done in terms of inspiring those that are studying under you, those that are now going to study under you?
I think it's a great moment. Apollo inspired a generation around the world to pursue innovation, to pursue technology, to ask hard questions and do things that we thought were impossible. I really hope we're going to have the same impact on this generation, the Artemis generation, and we're really seeing massive amounts of excitement, and not only from space geeks like us, but from everybody that we talk to. And so it's a great moment of opportunity for us in this country to continue to drive STEM learning and innovation.
And Jared Isaacman, of course, the administrator, how important has NASA's focus been on this, to be bold, but also what about the money and what more is needed right now from the government?
Right. I do think Jared has been a real breath of fresh air coming in and trying to drive the agency to move faster, but do so smartly. I also know that he understands, based on personal experience, the risks involved in human spaceflight. And so we're going to fly when we're ready, but we need to start moving things out of the way. When I was director of JPL, I had this group I called the snowplow team, which is, can we get stuff out of the way for the technical folks who are trying to get us further, faster, and get things done? We've got to be the people that clear out that clutter. And I know that he's really committed to that. And it's great because NASA needs that. It's become a bit bureaucratic, and it's great to have that breath of fresh air in Jared.
Well, under your tenure, you were launching several new NASA missions. Laurie Leshin, it's always so great to have you on. Thank you so much. Former director of NASA Jet Propulsion Lab, currently the professor of space futures at Arizona State University. Now coming up, Apple. It's permanently closing its first unionized store in the United States. More on that next. This is Bloomberg Tech. It's time now for Talking Tech, and first up, shares of China's Sharetronic data. They plummeted 20%. It's following US charges against Supermicro co-founder for allegedly smuggling NVIDIA chips. The company denies a relationship with Supermicro, but records show Sharetronic procured $92 million worth of NVIDIA H100 and H200 processors, which have been banned from sale to and within China. Meanwhile, NVIDIA-backed Lumentum said demand from the biggest US tech companies for its optical components is accelerating and would be sold out through all of 2028, later this year. The company is investing at least $100 million to expand its specialized factories in Japan, and the stock is up 1,500% over last year as investors bet on photonics as the essential plumbing for the next generation of AI data centers. Meanwhile, Apple is shutting its first unionized retail store in the United States in June, citing declining conditions at the mall. The company said in a statement that the employee can apply for open roles at Apple in accordance with a collective bargaining agreement. The union representing 1,000 employees called the move union busting, saying Apple's claim about the agreement is, quote, simply false. Let's dig into that. Bloomberg's Josh Idelson is here with more on the story. So, is it that the mall isn't performing well, or is it that this was the one rare case of unionization?
Well, this tees up what is likely to be a years-long legal battle, potentially, over that question, whether this was illegal retaliation or simply a business decision. It's not inherently illegal for a company to shut down a unionized location, but it is illegal for a company to retaliate against workers for organizing by shutting down. And across various industries, it is often one of the biggest fears workers have about unionizing is that it could lead the company to retaliate by shutting down their business.
How would evidence be weighed here? I mean, several retailers, we know Crate and Barrel, Banana Republic, have pulled back from that particular mall, but they're not electronics sellers as well. And so what is it that you've tended to see come forward in these years-long battles?
The U.S. Labor Board, when it conducts an investigation, talks to various witnesses, looks at documents. Sometimes there are internal communications that come up that influence the decision whether to issue a complaint. Then the case proceeds through many steps after that that can end up in federal appeals court. The union will point out, as they have, that Apple, they say, is not letting the union members that are losing their jobs get the same right to transfer to other jobs that workers at the other two stores being closed down are getting. And the union argues that shows the animus against the union here. In the meantime, though, this upends one of the few footholds that organized labor had at Apple, and it could have a chilling effect on organizing elsewhere, regardless of what happens with a potential legal case.
The International Association of Mechanists and Aerospace Workers, how do they think Apple will unionize ever again or not, briefly?
Well, they're arguing that they will put pressure on the company, including looking to elected officials. We've seen sometimes these fights become as much about a company's brand and reputation as about the day-to-day profit of the company. And unions look for whatever leverage they can to push back in these situations.
Josh, it's great to have you here live to talk through the story. Bloomberg's Josh Idelson there. Now that does it for this edition of Bloomberg Tech. Do not forget to check out the podcast. Find it on the terminal, as well as online on Apple, Spotify, and iHeart. From New York, happy weekend. This is Bloomberg Tech.